Welcome back to the Insurgent Mindset. I'm Matt Tyson. Welcome to 2026.
And I'm Rondo Moses, and this is a podcast about challenger thinking in a world shaped by disruption.
Now, typically in each episode, we explore the strategies and leadership mindsets that help businesses break from the pack and stay ahead in fast-changing markets. And this episode, we're going to look ahead to 2026.
And you can hear conversations, case studies, and insights from leaders who are applying these leadership mindsets to thrive in this uncertain environment.
Okay, so you can find us on YouTube, Apple Podcasts, or Spotify. And of course, you can always check out our companion blog on insurgentsgroup.com for a summary of our takeaways from each episode. So, Rondo, let's get into it. Let's talk about what do we need to be doing to prepare for 2026. It's a very interesting year as we, even just in the early hours of the year, lots happening.
Yeah, a lot happening. I think, if I think about it through the lens of the United States, for example, for us, 2025 was, politically a transition year from one administration to another administration. The Trump administration came in with a lot of promises in the golden era, and we got a lot of different, I think, reflections on what that year was like. So I think 2025 left a lot of uncertainty. And I think as we're moving into 2026, I think there are a couple of, in my mind, three big squeezes that companies, particular middle market companies, will have to be thinking about as we move into this new year.
Oh, I can't wait to hear about him, Rondo. Let's just dive in. Why don't you just kick us off with your predictions or your drivers for 2026? And I think we have to just remind ourselves that the goal here is to, help our clients, the C-suite, the CEO and their team to prepare for 2026 and to try to view this through an opportunity lens if possible.
Yeah, yeah. I mean, I think as we, again, we look back on 2025, we had here in the US, we had Liberation Day, which introduced tariffs and tariffs on, tariffs off that created a lot of uncertainty, also caused some margin compression. But we also had the, I think, high uptake of AI across industries, at least people experimenting with AI. I wouldn't say uptake. People experimenting, testing AIs, in particular at the individual level. I think as we move into 2026, just starting with the economy, I think we're still going to continue to see uncertainty in the economy, especially because of, still uncertainty around tariffs, but also, in the US in particular, inflation is somewhat on the rise again. So companies are finding it challenging to plan. Companies are thinking about their revenue being compressed and squeezed because of the difference between, the tariffs and what consumers and customers want to pay. So, in fact, what I've learned is that only a fifth of the tariff costs have actually hit the shelves. So there's still, four-fifths of that tariff cost that's out there that hasn't been passed on to the consumer yet. And those who are in the know are saying that maybe sometime in the first quarter or certainly by the second quarter, that's going to have an impact and that's going to further squeeze margins in the businesses. And I think that, the larger companies, of course, will probably find ways to weather that storm, but I think it's going to make it very challenging for middle market companies, companies between 10 and a billion dollars. I think they're going to find it challenging. That's one. I
Mm.
think another big trend will be AI again. I think we're going to continue to see the acceleration of AI, but I think that there's going to be a shift from just piloting AI to production. And I also think that we're going to see companies actually moving more toward agentic AI as opposed to, the large language models, ChatGPT, et cetera, et cetera, et cetera. So I think there's a lot, and companies are going to either get results from those work that they're doing, they're focusing AI, or they're going to abandon AI. So I think that's going to be a big focus on in organizations, and in particular in AI. I think we're going to see more of an emphasis on domain-specific AIs versus just general AI. So you're going to see a lot more focus on in those areas as well. So those are two big trends that I think CEOs are going to have to contend with this year. In addition to, the ongoing, I think there's going to be a talent squeeze as well because, not that I don't see companies laying off a lot of people. Some of the big ones have announced layoffs, but what they're not doing is they're not necessarily hiring and they're not necessarily filling open positions. So I think you're going to see more of that in 2026 as the uncertainty in the environment continues to linger.
Okay, so a few things there. Um, Not sure I disagree with any of that, but I made my own list. If I might share a few things on my mind, I think I'll start with the macro and then I'll get quite micro in terms of particularly what Australian CEOs need to be thinking about. But I think at the macro, the biggest thing for me that I'm concerned about, thinking about, have my head around, trying to get my head around is what is going to happen with the Fed chairman in 2026. So
Mm,
that's going to be one of the biggest levers in the world economy. Uh, who gets picked? Is it
right.
is it which Kevin, or will it be a Kevin? Will it be Trump's cat? I don't know. Like you got Kevin Hassett, sort of who looks a little bit like the political stooge a little bit, right? So I'm still a serious guy, but probably more likely to go along, and that takes us in a particular direction, which probably will look great for the stock market, but not so much for the bond market. And so that's one possibility. And then you got Kevin Warsh, I think you pronounce his name, Warsh,
Hmm.
like my grandmother used to pronounce doing the laundry. Um, but he's more of a kind of a policy hawk and a little bit more traditional. He's been in Fed roles before, probably would have an easier path to confirmation. But,
Hmm.
I think the markets have built in that it's going to be one of these two guys. But
Yeah.
um, if it's not, then I think we can see some extreme volatility. I think we're going to see more volatility if it's Hassett, perhaps less if it's Warsh. Poly markets are sort of slightly favoring Warsh as the confirmation pick, but we'll see.
Hmm.
Like, I wasn't joking about the cat. I mean, we could get somebody from left field into this role, which could have disastrous consequences to the global economy. So I'm pretty concerned about that. I think that's one of the biggest drivers. Now, most of us don't have control over that, but it kind of speaks to, with the tariffs that you mentioned, is kind of like planning for this period of almost like structural volatility. You could kind of describe it as like we have
Hmm.
this really wobbly, uncertain kind of environment rife with black swans. Like, who knows? Second thing on my mind. Um, well, sorry, the implications of that is when and if there'll be a significant major market correction this year. Virtually any indicator you can look at can say that the economy, sorry, the share market is too concentrated. Um,
Yes.
it's overvalued. There is, I don't know. I think there's a pretty high probability of some correction this year. Whether it's a big one or not, and what the trigger for that is, I don't know, but we'll have to see. But there's all this political uncertainty too, right? So um, I'll resist talking about Trump first, but you have a situation in Japan where, their policy is, potentially driving up the yen, which might create a little carry trade situation, which could result in the dumping of U.S. treasuries, which that Japan has a very significant volume of those treasuries stored up. So that could play a big role. You got this rhetoric around, well, you've seen this thing with Venezuela already, but
Yeah.
Greenland and the NATO, there are numerous sort of kind of global triggers that are I think, floating around that could create a significant market correction this year. So I think, like the planning issue, like if you were a CEO in this environment, it's kind of like roll back the clock to March of 2020, right? And you're facing COVID. I think we have five or six COVIDs locked up in the, kind of in the queue. And getting back to that idea of how do you create or dust off the playbook for the pivot because
Hmm.
these things go either way. And I think so that's a big deal, which I think we all need to be really concerned about or if not concerned about, just planning for and making sure
Yeah.
that, we're ready to go. So, but when you add them all up, global geopolitical risk, sort of the Japanese black swan or, kind of the Fed issue, or who knows what else might come out, situation in Minnesota could overblow. There's a whole bunch of things that could happen that could just kind of create a cascade. So,
Yeah.
I'd be
Well,
ready
that's
for
that's why I think it's important that, as leaders look to planning for this year, they have to embed some sort of scenario optionality in how they think about their plan, right? Thinking about it that way is really important, particularly when you think about supply chain, like building more resiliency in their supply chain because of the geopolitical environment and potential risks there, what's happening with China, et cetera. So I think you have to be thinking about scenarios and how would your organization respond in those various scenarios.
I agree. And so I'm labeling that as build pivot optionality into your planning, right? And of course, application of game theory and scenario planning, these are useful methods to help you sort of think through some of that stuff. So I think that's really important. And then, to my point about dusting off the 2020 playbook is how do you build, and I'll use your sort of term a little bit. I think we called it structural flexibility back then. How do you create a
Hmm.
flexible architecture for your business? So whether that be supply chain or tariffs um, or interest rates or whatever it is how do you build in that flexibility to allow you to you know, kind of work out from the center to the edges is some of these sort of more extreme plausible situations might occur. So to me, pivot optionality is really important. Um, you mentioned AI. I'm going to take a contrarian view on AI. I think, last year when we were just talking about what's going to happen in 2025, AI, 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 right? I don't disagree that people need to start banking their investment in AI, and certainly that'll be a focus for many businesses. I don't disagree that, we're kind of moving from the general to the specific and getting more focused on agentic AI. I don't disagree with any of that stuff, but
Uh-huh.
I think there's going to be an AI fatigue that sort of really shows up this year. And, just I think I did 50 public talks this last year in various places. And towards the end of 2025, I was hearing people say, I'm just sick of this. I'm bored with AI. And increasingly hearing companies talking about how to get back to the human, right? So, how do we create a more authentic human experience with just AI everything? And I think it's interesting, like even if you're looking at the socials and things like that, we're almost to a point where you don't know what's real and what's not, right? So
Absolutely.
I think that we're going to see a backlash on that, right? And for our own planning, Rondo, I think really thinking hard about what's a tangible, tactile experience that doesn't rely on, AI or uses AI in the periphery in the background. But I find it I do find it frustrating. And I think actually maybe 12, 24, 36 months ago, the insurgent play was AI. But now I'm starting to think that vinyl, non-digital, is the insurgent play, right? And
Mm.
so I think there's really interesting territory for people to kind of think about how to buck that trend and think differently about, you know, uh, using some more traditional methods to kind of create engagement create more tactile experiences, et cetera. So I think that there's a lot of, I think there's a lot of territory there. Pick up a pen and write a letter, right? So that kind of stuff is
Right,
really
right, right, right,
interesting.
right.
So I think I think that's important, and I think that that to your point about kind of AI productivity, sort of at least in the US, that's starting to show up in some of the statistics. So you're starting to seeing that. Probably less so here in Australia. We still have a kind of a significant productivity issue. So I think that's got to be square on the minds of every Australian CEO, how to harvest more productivity out of their business. Um, and find that balance between, driving aggressive growth, but really building that sort of productivity engine, I think is really
Yeah,
quite important, particularly here. And we have some kind of specific issues. So I was reflecting also on the Warner Brothers podcast that we did a couple weeks ago, which is really interesting. But kind of the meta trend there is that given the lax or looser regulatory environment, particularly in the US, these mega deals are probably going to start accelerating. We're going to see bigger
yeah,
deals. There's going to be more of them, and they're going to be more testing the kind of boundaries of, you know, um, kind of the monopolistic sort of era that we seem to be entering, which in some ways presages a bit of an age of the incumbent almost. We've kind of come through a big age of the insurgent, but as these forces, these big businesses consolidate, you're creating these, deep moats and big fortresses that you know, is a little bit bucking the trend. And you add that to all the dry capital, couple $2.5 trillion of dry capital. There's going to be
yeah,
private equity everywhere. So in the US, I think deals, 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 bigger deals, more of them. Certainly those deals will be hoovering up small to medium-sized businesses too. I think there's a lot of dry powder capital, a couple trillion that's going to need to be deployed in this cycle. So I expect that we're going to have a very, very aggressive year on M&A in the US. Australia
yeah,
is going to be different. I think we're going to not see the big deals. There's some new thresholds introduced by the ACCC, which make bigger deals harder. They have to be pre-approved basically, and the thresholds aren't that high. So a lot of those, I think it's going to be like a mid-market deal renaissance here. Deals sort of sub 200 million, deals in the sort of you know $6 to $10 million sort of range, which again below the thresholds are going to be where the money flows, which for mid-market CEOs provides a huge amount of opportunity here in Australia. But you're going to be competing with some of the bigger firms going after the smaller ones. So I think having your M&A sort of value creation methodology well and truly ironed out this year is going to be a key issue here.
yeah.
Couple other ones, right? So
Hey,
I
let me
think
just
at a
add something,
macro,
Matt. So,
yep,
in addition to M&A, I think IPO, at least in the U.S., IPOs are also going to be on the big. So,
yeah,
with
well,
2.75 trillion of
deals,
PE dry
deals,
powder out there. I mean, they're talking about a SpaceX IPO, Anthropic potentially, OpenAI potentially. Even I think there was a defense IPO that's a pretty big one that looks really attractive. Anduril, I think, is
Andrew,
another one.
yep.
So these can be huge as well,
I agree.
opportunities.
Yeah. So I just put that all in the deals bucket, right? So there's going to be a lot of action in this space this year. And so that action creates opportunity. And if you're a CEO this year, you got to be looking over the horizon, thinking about long-term enterprise value, what that means. Is it an
Right.
IPO? Is it an exit? Is it an acquisition? How do you leverage private equity if you need to? This is the year that you really need to be thinking about this. A couple other quick ones for Australia, and then I'll hand it back to you. I think we had this new legislation with the social under 16 social media ban, so that's going to play out this year. We'll see how that plays a role, particularly for digital marketing, privacy,
Hmm.
security. All that is going to be really uncharted territory, and also political pressure pushing back on some of that from other jurisdictions that do not want to see that, and from big tech that think it's the worst thing ever. So I think that's going to be interesting. It's sort of a big global experiment here. And hopefully hopefully it works. We'll see. But it is kind of something that I think if you're exposed in B2C, that's something you need to be thinking about. Just understanding how that plays out. And
Is this so?
then
Can you talk a little bit more about that? Is that a total ban on under 16, or is it parental, advisement only?
well, I recommend we do a whole podcast on this because it's just that interesting. But, in short, these social media accounts are going to be heavily restricted for under 16s, right? And, they're basically not going to be able to, well, look, there are always going to be workarounds and it's virtually impossible to manage. But, it will probably go as far as, you know, double ID verification. So it's going to be very difficult for people to get these accounts. However, it's still early days. It hasn't really kind of hit the hasn't really hit the hasn't really hit its stride yet, so we'll see how it plays out. But I actually think let's do a separate podcast on that because it's just that important, and I think it plays a
Interesting.
huge role in, how everyone from Google to Facebook and Meta, how they interact with consumers is going to change. So, and whether or not they significantly try to isolate the Australian market or whether these policies sort of, probably go to the EU far before they go to the US, but it'll be interesting. My last one, I think, is you know, sorry, I have two more. In contrast to what's happening in the US with the Kevins, we talked earlier about the Federal Reserve. I think we're going to have a slow um, we're gonna have a slowdown in rate cutting here in Australia. We do have a pretty hawkish RBA that is absolutely on top of inflation. So we may get one cut early in the year, but perhaps that might be it. So and it's not implausible that we might get an increase sometime this year as well. And of course, there's a sort of bit of a rate inversion too, because the long-term money seems to be creeping up in terms of those rates are predicted to be, increasing over the middle to long term. So whether that plays
Hmm.
a role also in, sort of housing affordability and things like that can play a role. Finally, and I just wanted to say on behalf of the Insurgents team, how gutted we were to see the situation unfold in Bondi a few weeks ago. And
Yes.
it's unclear yet the fallout from that. I mean, we will see, increased regulatory pressure for more firearms bans, increased security, et cetera. We'll see how that plays out. But that's also, kind of on the cyber side, I think we've had a lot of focus here in Australia for the last couple of years, and that will persist. But I think on hard security, we'll probably see more of a focus. So I think CEOs need to pay attention to, traditional bricks and mortar security here in Australia in a way that perhaps they haven't been. Maybe we've gotten a bit complacent on that. So all
Yeah.
that together, there's a lot happening. I think. Um, but it was awfully tempting to say, "Oh, this year is going to be a lot like next year, like last
Like
year."
last
So,
year. Yeah.
in some ways, that'll be true, but I do think there's a ton of opportunity for CEOs this year.
Yeah, the other thing I would touch on from the US perspective, as we mentioned, there's going to be a lot of PE dry powder that's being utilized in 2026. I would say too that the focus on cybersecurity is going to be a big deal with PE companies. So companies that have strong cybersecurity capabilities are going to be looked at quite favorably, and those who don't are probably going to be discounted or they may walk away from them. So companies as CEOs are thinking about, improving their attractiveness for PE, they should be thinking about where are their cybersecurity capabilities? Are they strong? Or do they have a lot more work and they need to focus on those and or work on those in 2026? I think that's
Yeah, I
that's
kind
an
of
area.
agree with that. I think that is absolutely true here in Australia. I wonder, though, whether or not it even matters in the US, whether they're going to, these big breaches are even going to be investigated and you know, whether the policies are going to be enforced. I don't know. I'm not sure. I mean, certainly
Well, I
from a
think it's less
consumer
about the
protection point of
investigation and
view.
more about the potential loss of
Sure.
reputation, lost revenue. I think
Yeah,
those
yeah.
things would be critical.
I agree. But at some level, we have a pretty short memories on these things that happens reasonably frequently. And then, there's a big hoo-ha, and then, we're on to the next thing. So,
Right.
which I think is interesting. Like, I think, something we haven't talked about is, consumers, right? So we have is it Generation Alpha, right? Kind of coming up, which is the first ever AI native generation. So these guys are
Mm,
going to be consumers in the next little while. That's going to be interesting to see how that plays out, and particularly how marketing kind of, orients towards these consumers. I think that's really interesting. I think, we did talk about AI backlash, so I think that'll be a factor. But I'm interested perhaps in how the customer is going to evolve this year. Are they going to be the same? Are they going to be different? Are they going to be buying the same things? Are they going to be prioritizing authenticity? Are they going,
yeah.
what is the consumer? You know what I mean?
Yeah.
What's the consumer picture on this? I think is an interesting question for our audience to think about.
Well, given the situation, the uncertainty in the U.S., I think, in line with what happened in 2025, I think there's going to be more of a focus on value, affordability, and value. Even the higher income consumer was looking for doing more value shopping. So I think that we're going to see more of that in 2026 as the economy and things get even tighter. Potentially, prices are going to go up higher. I think there's going to be more of a focus on value and affordability in 2026 than it was in 2025 as well.
Yeah, I think that is probably true, particularly in the US.
Yeah,
And everyone's been squeezed over a relatively long period of time, so I think that does play a key role. Um, I guess, circling back a little bit to AI, if you extrapolate what's happening, you can almost imagine where these AIs are marketing to each other and the consumer's out of the loop at some level, right? So
right.
I think that's really interesting. Like you talked before about agentic AI, right? Agents talking to agents, selling to each other, where it's sort of the humans are on the periphery. So
Right.
I do think like the implications of that for corporations is to try to figure out the coexistence between AI and people, right? And I
Yes.
think that it's almost like AI change management will become a key factor. Like, how do you, um, AI ergonomics, I'll coin a term here, right? It's sort of like, how do you teach AI or teach people in AI to coexist in the workplace in a productive way, I think is going to be another big focus for this year, or at least it's something that we start focusing more on.
Yeah.
Um, and we'll see how that plays out too. So lots happening. And, we didn't mention also, you've got a midterm coming up this year, right? So
Oh, yes.
that's a big factor, which will play a key role, I suppose, in, you know, either a lot more uncertainty, because I suppose if the midterms go one way, then you're going to have a higher accountability environment. And if they go
Yeah.
another way, you're going to have virtually no accountability, right?
Yeah.
So it's going to be one way or the other. It'll be
Yeah,
very
politically
interesting.
for us, I think the challenge, the key moments are going to be the midterm, but I also think leading up to the midterm, it's going to be what's happening out in terms of just the communities. I think you're going to see a lot more. I can tell that there's going to be a lot more protests in 2026 than in 2025. I think more people are, not happy with some of the decisions from the Trump administration and the way they've approached things. And I think that more people are going to be taking to the streets and protesting. Like we just had this incident yesterday, where ICE shot this woman in Minneapolis, and people were out protesting in, not only in Minneapolis, but in New York and other places. And I think you're going to see more of that kind of activity as the pressure, from the Trump administration continues to move in the direction of tough immigrations, even, t taking the president of Venezuela and bringing all these kinds of issues that some Americans are going to push back on. They're going to take it to the streets.
Yeah, yeah,
And
but
I think,
others are all for it. So it's sort of like, yeah,
right, but I'm
you
just
find
saying
that
that
balance, right?
that sort of social unrest is going to continue to build over the year leading up to the midterm. That's my point.
Mm-hmm. So I guess from a consumer point of view, you still think that is it harder for companies in the US to hedge their bets on whether they're marketing to blue or red consumers? So this must be a planning, like if you're the CMO of a large corporate, this is keeping you awake at night every day. How do I market to
Absolutely.
these people? How do I engage with, this increasingly polarized demographic where the polarization counts almost more than every other factor combined? Right? So, I think that's a really interesting planning question
Yeah.
for CMOs and the C-suite is like, how do we reach these consumers, but do it in a way that either declares fully which side we're on or tries to maintain this sort of neutral environment where you're hedging. I think that's very interesting and difficult. And that's been persistent since sort of probably Me Too, Black Lives Matter, et cetera. It's been building and building and building. But the real implications for the marketer is, geez, how do I choose and how do I find
Right.
that balance? Difficult.
Right. And we can see what happened, at least here last year, 2025, with companies that seemed to be taking a position like Target, which had boycotts and still boycotts going on Target. Their stock price is down significantly. Tesla's car sales are down not only in the US, but globally.
Sure.
Some of that is because of, their high visibility CEO and his relationship to the Trump, administration earlier last year and the Doge, all that. So you're going to see companies also who are going to be managing the optics of how close they appear to be to the administration and how that fits with where the broader society thinks they should be positioning themselves. That's going to be dance that these CEOs are going to have to play and do as well.
Yeah. Okay, well, big year ahead. I think, and it'll be a big year for the podcast too. We're going to have more guests on this year. We're going to get into some more depth on particular topics. I guess for my summary for this year is, I'm going to reprise the advice that we gave CEOs right at the early days of COVID. You got two choices. This is a volatility rich environment, which means lots of opportunity. So are you going to be the insurgent CEO, where you're on the attack trying to take advantage of these opportunities, the wolf, if you will, or are you going to sit on the sidelines and wait? I don't think it's a
Yep.
great option to sit on the sidelines and wait. I think you've got to be assertive and aggressive. And if you're not, you're going to miss the boat. You're going to give up value and, potentially you're going to find yourself less competitive than you were in coming into 2026. So I would say that this is your year to really go on the attack. All of this
Yeah.
volatility creates a lot of opportunity, and if you're a lazy sort of sitting on the fence type CEO, get out of the way.
Yeah. I think to add to that, I think it's about being intentional, not being afraid, uh, being intentional. So being focused, not saying that you can go and do all things, but be intentional about where you want to make your mark in 2026 or where you want to position yourself so that when things maybe turn around beyond 2026, you're ready more so than your competitors. And I also think that it will be important for companies, in particular, let's say middle market companies, to imagine themselves being the target of a PE company. Are you ready for that? are you ready to be a target? What can you do to make yourself more attractive for a PE company to buy you? Even if that's not what's on your radar right now, what can you be focusing on this year? Whether it's, improving your cash flow, improving your cash turnover, improving your operational uptake, your scalability of the organization. What can you be doing to improve the attractiveness of your company?
Always Rondo, right? But you also, what can you do so that you don't get your pants pulled down and you're sort of vulnerable to the PE taking all the value? So
Right,
I think there's like I said, there's going to be lots of deals this year. These deals are going to be everywhere. You can be on the right side or the wrong side of these deals, and you can get screwed pretty quickly if you're not careful. I agree with you, right? Be ready, but be aggressive too. This is going to be a great year to be assertive in the market, and I think if you're not, then you're missing something important. But that said, find a balance, make sure that you're getting the basics right, really focus on productivity, focus on value growth, not just revenue growth,
right.
and leverage some of these investments to realize all this change that we've just experienced. You've got to capitalize on that value too. So and then you mentioned the labor constraints. I think that's going to persist. But I was interested to see a very small factoid that in Australia, we've largely given up on work in the office. I mean, very few companies are forcing everyone to come back, typically a 3 day a week or something like that. But I also note that in the US, it's shifting the other way, that they're bringing people back to the office. So,
Yes,
that sort of human dynamic in the workplace is also really interesting. I also recommend that we have a deep dive on that issue at some point this year, just to kind of get more nuance on what's happening in the workplace, and perhaps bring a few experts into that discussion too.
that sounds great.
All right. Well, again, Happy New Year, Rondo. Looking forward to a very fruitful 2026. And for our listeners, get out there, make things happen. Don't stand on the fence. So let's go.
Happy New Year, Matt.
All right. Just a reminder, you can find us on Apple Podcasts, Spotify, and YouTube. Look forward to seeing you this year. All the best.